What are good cap rates in today's market? Who knows? Let's talk about it. Hey, I'm Tim Diesel. I'm a commercial real estate consultant. This channel is designed to give you tips and strategies in your investing business. If you're a broker, this will definitely help your clients. What is a good cap rate? Some people, they like 9, 10%. Others, they're more comfortable with 4 or 5%. If you live somewhere in California, that's what they're given out there. But it really just depends on where you are. Typically, the average is about 7%. I'm talking about all over the US, right? I don't know what it is anywhere else, but Canada, maybe it's different, who knows? But in the US, it's about 7%. Now, it depends also on the type of property you have. So if you have a retail building with a tenant, let's say like Taco Bell, and they have a 15-year lease, obviously your cap rate's gonna be smaller. If you have a Walmart or a Walgreens, your cap rate tends to be a little smaller. If you have a 20-unit apartment building in a rougher part of town, yeah, you could see 11%. It just really, what are you comfortable with in getting? So some of the investors I work with, their issue is they have a lot of cash. And they have a lot of cash not producing anything. It's sitting in the bank doing nothing, and interest rates are going down, which is not good for them. So if they were to get a 4 or 5% cap rate or return on their money, they are extremely excited, right? Now, if you're paying all cash, the rate of return on your money is different than getting a loan. Unfortunately, right now, banks are a little weary about giving loans to individuals or corporations. So if you have a syndication of some sort, you want to pull everyone's money together, the programs you could qualify for a couple months ago, some of them aren't there anymore, right? The alternative market is pretty much gone, and everyone's just kind of on edge. They want to see what's happening with everything. So always the answer to the question is whatever you're comfortable with. Now, there is no right or wrong here. If you have a medical office building, right now I would be very, very hesitant about buying something in a lower cap rate, because there's not very many office jobs or long-term office contracts that I have seen that will stay there for a longer period of time. Now you have your office tenants that I love and I always talk about. You have your doctors, but even your doctor's office, they don't necessarily sign a 20-year lease. It depends. I've seen 3 to 5 years, and 3 to 5 years could be good, but a lot of businesses, they go out of business 3 to 5 years. That's the same thing with retail. Now retail is tricky because there is a lot of leases that I have seen, and suppose you're in a location that had a Toys R Us. Let's talk about something that already happened pre conditions that we're in now. So you have a Toys R Us and they left. Well, in your lease, it says that you're there because the other big tenant is helping you bring business. Well, if that tenant is gone, that kind of gives you an out, right? It doesn't mean everyone's going to take it, and it doesn't mean it's in every lease, but that is up there. Meaning you're there at that property because there's a Home Depot, there is a grocery store, there's something there that's attracting you business. So if that tenant leaves, who's that other big box tenant going to be? It's going to be really tricky, right? Because you're going to have a hard time filling that unit up if you're the landlord. Now, you want to fill it up with good quality tenants that can bring more revenue and patrons to your other tenants that are in the building already. So you have to be selective and you have to be careful. But here's the issue. Right now, how many businesses are trying to expand? All we're hearing is there's a lot of businesses not getting the stimulus money, and some of the big businesses are giving back the stimulus money. And if they are, that's fantastic. They're probably doing very well. But if they've laid people off, they're going to have a tough time. Now, all of this has to do with cap rate, because the security of the tenant is what determines the cap rate. So the cap rate is the return on the property, and I've talked about this before. This can be altered a little bit. So if you have an apartment building, maybe 100 units, well, you're in a position now where you're going to see those cap rates are going to have to start going up, because not everybody's paying their rent. So that 97% vacant, or the 3% vacancy, that might dip down, might get a little higher. So what happens to your values? Your values have to come down a little bit. And it really just kind of depends. Ultimately, this is a game of cash flow. That's all we're dealing with. How much money are we bringing home at the end of the day? Don't let anyone fool you with all these formulas, this is just a bunch of nonsense. End of the day, it's how much money am I bringing home for how much money I'm putting out. That's it. That's why I never talk about any formulas. I only explain them to you. I don't use them to confuse you. And we rarely talk about cap rates, but I know investors are asking the question and they must really be on their mind. And that's what I want to address. So the answer is what you're comfortable with, but don't overextend yourself, especially right now, because I wouldn't be surprised if there's a lot more businesses calling it quits this year. And then multifamily, that's everyone's darling. It could go the other way, it seems like. If they keep pushing this no paying rent movement, it's going to be very bad. So as always, industrial is going to be very safe, because if you have a manufacturing company or a distribution center, or you only have one tenant, yeah, you can make the argument you only have one tenant. If you lose it, you're in trouble. But usually a lot of those factory jobs, they're there because someone's buying your products, or you're distributing those products somewhere. So until they've completely cut that off, you're going to be okay. And you don't have a whole lot of tenants to deal with, and you're dealing with absolute net leases. So the owner isn't really responsible for anything. And that's what makes it a little bit easier. See, in an apartment, a lot of times, if they're not newer, you're paying for the water or you're paying for other expenses. That could really add up if no one's paying their rent. How are you supposed to offset all these costs? You can't really pass through costs to apartment tenants. It's just not done that way. And I don't know why. It's just the way it is. You're not going to be very competitive if you're renting a 2-bedroom at a triple net. I don't know if you're going to get any takers. Now, retail, it's going to be up in the air, but they're going to have to come down. And we're going to have a lot of vacancies coming up, but it doesn't mean there's not going to be good deals out there. There's always going to be opportunity. So don't ever believe that everything's dead in the water. I hope that was helpful. All right, like this video, subscribe to this channel, leave me comments, ask me questions. I'd love to answer them, and I hope you guys enjoyed this video. Thank you.